Good evening, everyone. Hello. Hopefully, you guys had a good day in the market. I had a good day in the market. How did you guys do today? Yeah, Twitch stream is way better. Yeah, it was a crazy day. We had a good poll. Now, typically, I'm just gonna let people get into the stream, but typically the last day of the month and the first day of the month, we see like red days or traders really struggling, right? There's a lot of quotas to be met, a lot of stress, with whatever contracts, expirations that are, meeting their expirations. And everyone wants to end the month off green and they also want to start the month off green, right? So, you know, really interesting day. I want to talk about, now I'm just going to just be chatting just for a moment before we get started. Going into the day, I brought this consistency up, okay? And we went over this during the stream, but what was last Friday? Let's see, Friday right here. Or this is this Friday. Let's go to last Friday. Right here. Okay. So you can see these are days that I call, or I refer to them as days where they pass out money, right? Market makers are passing out money. Everyone has the opportunity to make 100, 200, 300% on a trade, depending upon if they can hold it. So this was last week, not last week, but I guess 2 weeks ago, the 21st. Okay. So they gave us, now here I can draw like a big circle just to capture this. I can go to 10 now. I think it's going to be a little too far back. Yep. Okay, right here. So they gave us 2 simple days, correct? Right? Thursday, we wrapped up the day, very strong momentum. Friday, we wrapped up the day, very strong momentum. And then on Monday, it was choppy, right? You can see off the open, we're not getting a direction strictly off the open. We're not seeing consecutive lower highs, right? Pop up, tweezer top, push down, first knife, or knife down, first pullback, it's shorted, second pullback. These are the key 2 entries, right? You didn't see that on Monday. So what did we get this week, right? On Friday, looks familiar, right? We've traded this before. Every single chart, and that's why I say, it's the answer nobody wants to hear, but it's, hey, when did you get better? When did this, when are things going to change for me? It all happens through experience, right? It all takes time. And trading rewards those who give it time and give it patience without forcing, right? You come into trading with a gambling mindset, you're not going to win, okay? So we've traded these charts before, right? I mean, I've traded all of these kinds of price action, days. Look, chop day, what is this, guys, right? This is that choppy, ugly mess that everyone complains about the first 2 hours or whatever, and then they give you a simplistic rally, right? And then you're sitting there with your smaller account if you're new, whatever, and you burn out all of your buying power here, and then they give you something free, a lob, right? They lob you something. This is the same chart as this, right? So we had a nice trend day Thursday, nice trend day Friday. Sounds familiar, right? What did they do to you today? It happened. I mean, statistically, traders' worst days are Mondays and Fridays. I mean, I will always say that. I sound like a broken record. Well, it works. Trading, the reason why I love trading is because you don't have to learn every new shiny strategy, every, new bell and have all the whistles, all of that stuff. It really is unnecessary. I'm going to teach you tonight how to use supply and demand, how to use 9 and 20 EMA. I'm going to show you also the other indicators that I use, the 200 EMA on the 5 and the 10-minute chart. We're going to tie into yesterday's lesson, covering over tweezer tops and bottoms again, just to kind of hammer down on and, reiterate that concept. I think someone has a hot mic. I don't know if I can find it. Let me see. I think that we're good. So, same old thing. I mean, trading should be simplistic. If you cannot if I were to ask you right now, hey, what's your systematic edge? Right? You need to be able to explain it to me within 10 seconds or less, or otherwise you don't understand it. For me, I'm going to explain to you all of the strategies that I just listed, and I'm going to tell you that, hey, I'm a day trader. I like to scale out a big portion of my contracts, my position, and hold runners, letting my base hit of a trade, and we all know in options, base hits can be anywhere from 30 to 50%. Base hit of a trade turn into and develop into a home run trade. Okay. I don't know if you guys traded with me today. We had multiple 100% trades, multiple $100+ per contract trades, meaning that, I bought a contract and it gained over $100 per contract. Now, depending upon how many contracts you bought for your own position size, it was still a great win, right? So, tonight's session covering off, I'm just going to begin with the, this kind of area here. So every morning I post the directional analysis. I post it in the Discord. I post it for free on Twitter. Okay. And this is it, right? It's the same plans, but I go in the hourly chart. I just zoom out and I look at my zones. I said bulls, longs aiming to defend the daily demand of 310, right? Daily demand of 310. This is that area. And just starting off, shorts want to maintain the pre-market high of 316. Okay, so already starting off on this day here, you can see that the pre-market high was being defended. And towards the end of the day, this 310, this 311 pre-market low was being defended. These were two very, high interest points for both long and short. All right, one wanting to overtake and two wanting to do the same, right? Hey, thanks guys. Also, thank you Presto Changeo for the sub. We also have that giveaway that I'm doing. Right, I know not everyone can make it, but I'll do probably half of them in here. So 3 in the Discord and then 2 I'll just post on Twitter. Okay, so we're gonna choose 5 of these tonight. Make sure you guys have entered into the giveaway. We're gonna do 5, and we'll carry on with the lesson. So, also, I'll take questions towards the end, just so they don't get lost or flooded into the chat. Starting off, I want to touch on, okay, what is a supply and demand zone? Thanks, Alaska, for the sub. 9 months, bro. It's been a good time. Okay. What is a supply and demand zone? Okay, you guys can see from earlier, I have all of these zones. Well, why did I draw them? Why did I draw this one? Why did I draw that one? What about this? For myself, I have 2 kind of parameters that I need in order to draw a zone. Now, I use the same parameters on all time frames. Small time frame, like 5 minute, 10 minute. I use them on the hourlies. I use them on the daily and the weeklies. Okay. Number 1, the main one that sticks out the most are seeing large wicks, right? Seeing large wicks. And this is contextual, okay? You have to understand this. Okay, so let me go back to the clear set. Okay. Now, why would I draw this, right? Does someone have an idea as to why I would draw these 2 levels as zones? Pivot points, okay? But what does it show? What does it show? Sellers are present, okay? But what does it show? Because of the wicks, weaker resistance, right? Sellers waiting, consolidation. This is a new wave of sellers, right? So you can see selling, 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 selling. If I'm a smart put, or not smart put, but a smart short, right? I'm wanting to be a bear. If I'm a smart bear, right? I know that I should be very cautious. We have not had a 5-minute EMA pullback, nor had we had or had our first pullback of the day, right? You can see, as shown here by these this large space in between the EMAs and price action, right? So we're patient. We're doing the right thing. It may take another 30, 40, 50 minutes, but you want to protect yourself and be as defensive as possible, okay? We have all the time in the world to trade. So this is the first pullback, okay? This buying right here, many retail traders mistake this as, oh, this is the time to go long, right? It's going to reverse. Sometimes it does, but you have to understand the context of the trade. You have large upper resistance levels, 9 and 20 EMA, VWAP, and the 200 EMA on the 10, right? Major resistance levels, and you have the previous low of day acting as resistance. So when this previous support acts as resistance, this shows the next wave of sellers coming in. A zone, whether it be demand or supply, right, showcases where buyers and sellers most recently have entered into the trade or the chart, or this is an area where they're holding or looking to defend, okay? Looking to defend. So going back here on the other drawing set, you can see I've drawn this. This pops up, it knifes down. Well, this knifed down because the sellers came in right here. Same thing here. So I draw these zones. Are they interacted with today? No, not yet. I mean, this zone is first being respected. All right, and it also aligns with this 320 whole dollar cycle. Okay, so you've seen the upper wick zones, right? I also draw zones on small tie body consolidation, right? This pivot high here prior to a large move down. Okay, so that's just the basics. I know a lot of you guys have heard me say this. Okay, you can draw zones on 5 minute for the intraday, 10 minute, 30 minute, 1 hour for a little bit larger zones, and then kind of your macro zones on the 4 hour or the daily. Okay, so moving through here. All right, let's just practice drawing some zones on the intraday. Okay, and you don't want to cheat, right? You want to be like, hey, if I draw this zone, this is not cheating due to the fact that I'm not drawing it trying to showcase or I don't know, benefit the price action to make it look pretty, right? So like very early on in the day, you had this tweezer bottom, right? This shows you where buyers were present. Okay, so we know, right? I'm going to touch into this. Traders, you're going to hear me say this quite often. This is traders' biggest problem. This is, the biggest problem traders face. Traders face a million problems, and it's every single one is their biggest problem, okay? But we have to take one thing at a time, right? Now, just you can be silent, you can just be honest, all right? But who got wrecked down here on the breakout buy, right? Who was like, hey, I'm gonna take puts on the low day breakout? Okay, exactly. Yeah, I'm gonna talk about it, right? What if the next candle breaks that zone, right? Who got smashed here? And they didn't do it one time. They didn't do it 2 times, right? They did it 3 times. This is why. Okay, this is exactly why. If you're learning breakout trading, all of that right now, I'm telling you, you're putting yourself into a world of pain, okay? You are late to the move. When you are, I believe ranking inside in the group, he was hitting the 10-minute 9 EMA or 10-minute 20, whatever, like here or whatever, somewhere in this area, one of these upper wicks. Okay, so understand this. When you break the low a day, what's the rule that I tell you guys to do? When you break a pivot low or pivot high, right? It's to scale. So, logically, like I always talk about, we need to be able to weigh both sides of the trade, right? Trading is about understanding the dialogue between the bears and the bulls, right? People who are selling, people who are buying. So if this person right here took a short or took a put, right? Options, we're not shorting options, but we are buying puts in, an aim to push price lower or to follow price lower, right? So if you get a contract up here, right, position size, and it cracks your pivot target, the low of day, you're scaling out here. So what is that breakout buyer? Right? What is that breakout buyer to this dip buyer? Right? It's their payday. You're paying them. Hey, thanks for the money, dude. Thank you. See you later. I'm out of here. I'm a dip buyer. I'm going to go kick my feet up on my desk and I'm going to go enjoy my day. Right? This breakout buyer down here, look, they break the low day. Oh, look at this big knife. It's a flat body knife. Let's buy the dump. Oh, yoink, right? You got wrecked. Okay, well, I'm in an 84% roll, the breakout buy, right? The low, I'll go, here, it broke the pivot twice now. Let's take it again. Yoink, right? And then, oh, this is the dump, right? On the smaller time frame, I'm sure, like on the 1, right? Oh, you were sure, you were like, this is the breakout buy this time, right? This is the third time they're breaking the low a day. See you later, right? Sayonara. Okay, I'm telling you right now, if you're new, I don't care if you're a year and a half, 2 years, whatever. If you're a breakout trader, okay, you're gonna have a much harder time than the concepts that we're gonna teach, right? The pullback entries, right? Buying, I love to refer to it as like calls on the drops and puts on the pops, right? Or you can say, you know, uh, going long on the downticks or going short on the upticks, right? So you really have to train your mind, because the reason why traders get into this kind of, mindset of like, let me remove this, like why they want to hit the low a day. Why would someone, ask yourself, even if you did this wrong, ask yourself, here, I'll put the link. Okay. So, ask yourself, why would someone want to take puts down here? Right? Why would they want to take puts down here? Well, it's because they see everyone else making puts. Remember the person who was like, "Hey, we're breaking out on this pivot high, right? We're gonna push up to a higher high. I'm gonna buy calls for the breakout hitting VWAP." Well, why would they buy there? Because they see other people making money. So psychologically, you have that issue of following other people, following the crowd, right? Don't, it's traders have such a hard time. I mean, it's really distinguishing yourself from your human tendencies, right? Your everyday tendencies, like, oh, there's a faster line in the grocery store. I'm going to go into this line, and it ends up being longer by the time you get there, okay? So, touching on this move right here, okay? Right, we had this low a day. I know it looks pretty big now because I have the chart all wonky. There we go. Okay, now I know if you're trading, 0 days or very low expiry, kind of contracts, like, any of these first 3 or whatever, this is a pretty big range. You have 312 to 310, maybe $1.50 range or so. So one way that I like to get into a trade, or even, understand this, is that, in order for the short to continue, right, for this to flush, right, these buyers have to turn into sellers. Well, you can do this. Now, if you want to go long, obviously, you want to buy on a downtick, right? And what I mean by that is, hey, if I want to buy calls, I need to be buying near a possible point of reversal, because I will stop out in an area below the low a day or my support level, whatever it's going to be. Some traders may have gotten stopped out here. That's fine, but it's really dependent upon their entry, right? Not maybe, but surely the trader who went long right here on this rip up, they stopped out down here, and then they watched the rip the rest of the day, sitting there like, oh my God, I wish I had held on. What happened? My trade was right. No, your trade was not right. Your entry was awful, right? Because you bought on an uptick. This was a prime short entry. Okay, so the prime long entry, what you can do is, looking at this demand zone, many traders look at it in this kind of instance where you can have descending bids, right? You can have like, this is my feeler entry, this is my, starting to scale in, my heftier entries down here towards the bottom, right? These are called descending bids. So you're going to have a much more weighted average near the bottom, right? You're not buying, let's say you're buying 10 contracts, right? You're not buying, right here. You're not buying 2, or whatever, 2, 3, 2, 3, right? That's not what you're doing. You're buying 1 here. Okay, you're buying 2 here. Right? So that's 3. You're buying 3 here. All right, so that's 6, and then your 4 contracts are near the lower portion. Your average is going to be much lower, meaning that you can hold on a little bit longer because your entry is better, and you capture this move because you're not truly stopped out down here, right? You have tweezer bottoms. If I clear this chart out, okay, It's not time. It's not time for that. I mean, you know, we do this every day. I'm going to show you guys many examples. So you really don't have to do this. But I mean, if you're looking at it from even this perspective, you have the low of day. Did anything close with strength for the bearish perspective under the low of day, this initial entry, right? You also get, right, you have to be able to see this horizontal line, right? You have this tweezer bottom right here, right? Tweezer bottom right here. You can see that this buyer is holding a wall of bids at 3, 10, 12. Nothing closing below. This right here, let's say, you know, I'll show you. Okay, right here, you're probably going to trade like 311, 312 calls. Okay. Send to 2. Okay, right here. You can see right here, right? Yes, you have theta decay, and yes, it's 84, or you know, a 0 DT or whatever. Okay, you see this little wick. It's the same thing here. The buyers have built up a support at 61 cents. Okay, and it wicks down. Yes, down here for how many minutes, right? 1, 2, 3, and then it brings you back up. Some traders may have gotten wicked out. I mean, most of the time, you're not going to get wicked out on a little candle like that, okay? Or at least you shouldn't. But you can see that they hold this. They hold all of this right here. You can see the range as well, right? From 61 cents to 98 cents. They eventually break and base above, and these go very, very high, right? But you have to weigh both perspectives, right? So let's look at the puts at this point in time. You guys will see me on stream. I'm holding, or you know, looking at both calls and puts many times when it's consolidating. Okay, so right here, you probably trading like 312 puts or 311 puts. Okay, right before the close, you can see right here, clear the drawing set. There's the support level. They're holding this 98-cent bid, right? Right here, this is where they're holding. Where's the resistance? Right here over $1.63. All right, you can see this begin to form out. What time is that? This 110. I think this is much. This is 320 or 220. 220 right here. Okay, so you can see right here, this consolidation range is the same thing on both the calls and the puts, right? You have this range. I mean, maybe even if you had put like this resist or this support level right there, you can see traders, they're like, oh, this is going to be the momentum to the downside. We're going to flush. Make sure you're looking at your options contract, right? You want to be able to weigh both your long and short risk, engaging both sides. I think another entry that we were trading, I actually did this today. What was it? I just had it up before I changed it. I think it was the 315 calls, right? Someone was saying, oh, you know, who would have time to do that? Blah, blah, blah. Well, we do it live fairly often. Maybe it wasn't that one. Let me look. It was the 315Ps. I think it was the puts. Yeah, here we go. So let's blow it up. Okay, so right here. Okay, now yes, we're trading off the options contract, but I'll show you on the intraday. Let me clear this chart out. Ooh. Okay, this is what time? 10:30. Okay, stacks time, right? So we capture this, right? 10:30 right here, right? I was trading the 315 puts. Why was I trading the 315 puts? Well, I had the 10-minute 9 EMA or the 10-minute 200 EMA marked. We can go on the the original drawing set. You see this level right here. I can go on the 10-minute. I normally mark like, you know, little arrows. You can see arrow showing. This is where the 10-minute 200 was shown. Okay, this is where it was sliced off. And it was a tweezer top, right? On a smaller time frame, I'm always watching the 1 minute. Okay, and I was looking for that lower high confirmation. So when I took this trade right here, I'll show you the call out. What time is this? This is like 10:40, 10:30, 10:40. Okay, right here. 3:15 p at 10:39 a.m., risking the high of day. right? And I almost got stopped out. We talked about this at 10:43. I almost got stopped out, right? Because it's pushing to the high of day. I said I'm about to get stopped out of my puts right here, 10:42, 10:43, just about. So we're looking at this area right here. Now, how would you scale into this? Well, this is exactly what I did. I got my feeler entry here at about $1.70. I listed on stream that I would be taking entries more, scaling in more here at this highlighted area, but these levels, okay? I said this was a support. I would buy if they tapped in here. I would buy in at 150, and I would also buy in around $1.35. Well, what gets filled? My feeler that I take, slapping the ass, gets filled. This bid here gets filled, and this bid gets here filled, right? This was a lighter entry, a little bit more medium, right? And a much deeper entry. The larger entry was near the base because the support where I would have stopped out was right below 1.3. All right. So we see here that I get 3 of my bids filled. So I'm just going to highlight these 3 bids, right? I have an average of about $1.60, $1.65, right? And you can see that 1 or 2 things are going to occur. I'm either 1, going to get stopped out, or 2, the trade's going to work in my favor. This would be a lower high confirmation, right? Lower high confirmation for the puts. And that's exactly what happened, right? These run. Hold on. Sorry, I had to sneeze. These run from about $1.60, let's say $1.64, right? To the peak up here at 347 for 113%. I walk through this, okay? 315p. I almost get stopped out here at the high of day like I talk about, right? Almost scaling out some of my puts 1045. 9 EMA on 5 minute, main target. Okay, this was the main target. I'll show you on the 5 minute. Let me clear the drawing set once more. Right? Because why? Many times when I see this right here, guys, this extension from price to the EMA, I will take the opposing direction in order to bring price to this EMA, because I know that typically we have to test, or factually we will interact with that 9 EMA on either the 5 minute or the 10 minute. Okay. So this was the main target. 40 a contract gain, 60 a contract gain, right? Main target hit, I'm scaling more. $100 per contract gain right here, right? And we hit well over 100, right? These hit from, like about 160 because it was 100% gain. $160 per contract on the remainder, right? And you guys saw I was scaling out 40 a contract, 60 a contract, 100 a contract, okay? And that's how you trade a descending bid trade. How long did that take me to do? A couple minutes. And of course, it's all about practice and everything like that, but it took a couple minutes for me to, really organize a trade that I was going to take with risk. If I have $1.60 risk, yeah, I'm risking a little bit more down here, maybe 15%, but would you not risk 15% to make over 100%, right? I mean, ask yourself, the risk to reward, how many times does 15 go into 100? Okay, about 6.5 times. So that's 1 to 6.5, just about. Is that not good risk to reward for you? Would you not take that trade? So really ask yourself, is this too much work, right? If am I a trader? Is this too complicated for me, right? That mindset and that attitude really, is the reason why you're possibly taking failing trades. The reason why you're not planning out these trades to a point where it's going to benefit you. Why would you not put in a little bit more work to get paid more, right? So yes, Dan, you must, dude. The options, I'm telling you guys, the main things that I'm using, tweezer tops and bottoms, obviously supply and demand, 9 and 20 EMA, and the options contract chart during points of consolidation. Tapsman, this is the Discord link. I'll post it, right? And a quick shameless plug, right? If you guys are enjoying this EDU session, I do these EDU sessions 3 to 4 times every week. In addition to live trading every single day in the Discord, I do stream on Twitch the first of the month. You also get access to our video library, right? This has all of the supply and demand videos that I have created myself. These are not videos you're going to find anywhere else, right? I made these. They're all about an hour long. You have supply and demand. You have EMAs, right? You have trading psychology. Okay, look at all of that I myself have recorded. Okay, you have issues that traders are facing, right? Tons of things, right? I think I talk about pivot points in here. Yep. All sorts of ideas. You have options basics, lots of basics in here for those traders who are like, hey, is this too advanced for me? You have a lot of options. Search this, watch the main option strategies, options basics, right? Options contract. I have a lot of how to execute options trade on Thinkorswim. Lots of beneficial information here, and over 100 videos about an hour long. Okay. You can see 9 and 20 EMA strategy breakdown, right? My pre-market channel strat, all sorts of things. My favorite setups and how to trade them, so on and so forth, right? So, and you can join through the Patreon link that I just posted in the Twitch chat. Okay, so moving on here, I'm going to touch on the tweezer tops and tweezer bottoms from today. We had quite a few today, and I mean, did anyone benefit from last night's session? I mean, I know that we are going to interact with tweezer tops and bottoms, but we had a lot of them today, and I was really glad that I covered it because I hope that you guys found benefit from it, and I hope that you guys were able to capitalize upon tweezer tops and bottoms today. So, did anyone make any money or take any trades based off of a tweezer top or bottom that they spotted on either the 5-minute or the 10-minute chart today? We'll take a water break. Nice. Good job, Aztec. I just have a $1,500 pre-built from Newegg. It's just my friend from Elevated Trades sent it to me. It's just like a 3060 base, whatever. I like the 10-minute, but I also use the 15. Okay, remember at the end of this live stream, I will be giving away those spots to the Discord to those who joined in on the tweet, right? I think you can still get in on the entry. I'll be going through, I won't be going through Nightbot. It'll be a different kind of program. So you have to had entered by liking, following, retweeting that tweet. Okay, and then we're going to get through the tweezer tops and the tweezer bottoms. All right. So going through here, like I'm just going to cover it from the top just once again. Okay, you have two options into entering a tweezer top or tweezer bottom trade. All right. So let me, this is the 5-minute. This is the 1-minute. Okay. Is this from today? No, it's not. Sorry, I'm a little sniffly. Okay, you can see this fairly early on, right? I'm going to highlight this wick. This is the first 5-minute candle that was developed, all right? You can see this, right? It's zoomed in, or it's highlighted. Now I'm going to zoom it in. Okay, so if you get this big upper wick, right, what should you do? Well, you should mark a pivot. First of all, that's the high of day. Okay, you should also, what do I draw for a supply zone, guys? What are the two things we just talked about? Right? What are the two things that constitute a zone? Tight candles, okay, and the other one, and wicks. Good job, right? Tight candles and the wicks. So you can see this is a large upper wick. I don't typically draw zones off the 1-minute, but this is pretty interesting to me when I see a large inverted hammer candle after a rally, right? That's not a strong candle. That's showing selling and strength in selling, right? It's an inverted hammer. So you can see the body. Now, normally for an early tweezer, you can slice the body. You can see this on the 5-minute. Watch how this closed, right? It closed like this. Second, there we go. It closed like this. So you should mark the base of the body, right? Like it's getting a buzz cut. Okay. mark the base of the body, whatever. That 317.1 level is where buyer or sellers are not letting any candles close above, correct? So you can see that. So what you can do to enter into the tweezer is bidding in up here, right? Bidding in this area, stopping out over the high of day. Stop loss over high of day, right? That's one way that you can enter that trade. And how would it have fared you? Well, I showed you this. Did I not? I can clear this chart out. I don't care, right? This was the high of day. Look at this. 1031. What candle is that? 1031. Mark the low, just like we did. Well, you have this area here. Let me highlight it. Remember, this hasn't occurred. Whoops. Right? Let me highlight this. Let me mark the price level. So you have a zone here from $1.50 practically to $1.30. 20 cents. It's a little bit more than 10%. Okay. So how would you bid into this? Well, you could bid in lightly, right? Around this area. Setting your bids or slapping the ask if price enters into your zone. What occurs? Right? Who gets filled? $1.47 gets filled. $1.43 gets filled. $1.40 gets filled. $1.36 doesn't get filled, but you got 3 of 4 of your fills, about 60%, right? That's how you bid in to your tweezer top or your tweezer bottom. That's how you bid in, all right? Now, what happens, right? The tweezer top, it flushes. We hit our first target. The main target is the 9 EMA on the 5-minute. I was like, hey, prepare. I'm going to scale out a lot here because it could bounce. This is the first 5-minute 9 EMA bounce. Right? So, is a stop loss after the candle closes? It's really up to you. You can keep your stop loss at the high of the day, right? This, just like I was showing you earlier, the stop loss over the high of the day. Keeping tight risk, right? Because we're not breakout buying. We're buying what? We're taking puts on the uptick, aiming for the reversal, right? Now, if I go through with based off of confluence on the 10-minute chart, the 200 EMA came through and sliced this off. You can see that very clearly. Nothing closed with strength over the 200 EMA. All right. So moving forward here, you would have made good money bidding in. Now, how could you have traded it from the other perspective? That's the first perspective. Okay. The second perspective that I really like to take tweezer tops and bottoms on, you're a little bit later to the trade with a little bit more confirmation, right, is this. So you get the tweezer top. Let's say you're not good at bidding in, right? It's too complicated for you at your current kind of, experience level. You can wait for the next either 3-minute or 5-minute candle and use that candle high. If you're taking puts, if you're going long, the candle low, you use the candle high as your risk, right? So, this is a little bit different because you could get a pretty bad entry or you could get a pretty good entry, right? Good is being closer to that 5-minute wick high, right? But you would enter here, okay? Let's just say general area to enter. Entry on 5-minute candle. Stop loss on puts over 5-minute candle high. Okay, this is the second entry. We went over this. I'm just reiterating this so that you guys can understand this. We're gonna see, I can guarantee you we will see another tweezer top or bottom tomorrow on some chart out there, right? It's inevitable. Okay, so you have your entry. You either 1, get stopped out, or 2, it follows in your direction. Okay, how can you stay into this trade? Well, what I like to do is moving my stop loss, right, along the way. Now, for me, the candle has to close above this wick in order for me to stop out many times, okay? No candle close, not stopped out. I'll keep the same stop loss. Moving forward, no candle close, right? Keeping the same stop loss, the candle closed right there. Right? So you would have taken your entry from here about 317 all the way down to about 314, 315, about 2.5 point capture, right? You're gathering 2 to 2.5 delta, right? Delta, as you all know, is what you're getting paid per dollar move on average for the stock price. So let's say, hey, you took puts right here. Depending upon what strike you chose, let's say, hey, it has a delta of 0.4, right? So that means for each dollar move, you're gathering $40 per contract, right? For each dollar move in your favorite direction on average, okay? Can you discuss the difference between how you view catching a reversal move in a thoughtful way versus catching a knife? Okay, so, like this. Why would someone have bought here, right? This is a knife, correct? But this is also the base of that demand. Now, it's very, you have to think about the context of this. Of course, I want to see 300, but looking at this chart, you have this daily demand zone. This is that area of liquidity where buyers are ready, set to prepare and defend their positions in case price is brought down here. Okay, we saw it before. Price was down here, it pushed down, they held it for a day, and then it flushed. And this is the area of liquidity below, remember? And what happened? All those FOMO shorts got wrecked, right? They brought it back up, okay, until it changed. So, catching a knife versus following through on a reversal, you have to have, just like every basis of a trade, guys, I have to have, one, my risk. Where am I going to stop out at the very least? Two, I need multiple levels of confluence. Well, there's a tweezer top. I have the 10-minute 200 EMA. There's a high of day here. It looks like we're very extended from the 5-minute 9 EMA in the very least, right? Very extended from it. I think I'm going to take puts, and I could be wrong, right? It's not more so pinpointing reversals, but allowing the chart to tell you in a sense that, hey, a put position would be validated up here. Always ask yourself, when it's this high up, would you go long there, right? Would I take calls right there? Nope, absolutely not, right? Why is that? Because the risk to reward, just like Zidian's saying, is not good here, right? The risk to reward is not good. What's the risk to reward? Well, for me, if I want to take puts, if I take puts, my stop loss is right here. That's better risk to reward. Maybe the probability is lower, but for me, this is what you should be looking at on the far extension. Whenever you see, I'm going to show you some more examples, right? This large space in between price action and your 5-minute 9 EMA, it typically comes back and touches it. Look at this space in between it. All right, we can go on another day. Look at this space right here. Not touching it. Look at this little space, right? Go through more. Look at this little space. And this one. And this one. You buy puts down here, you're asking for trouble, right? Don't buy when the spaces are very far extended. Now you can, look at this. This was beautiful. Same trade. Jesus. Same trade. Look at this. Okay? Ingrain this in your mind. Look at it. Big rip up. Large space away from the 5-minute 9 EMA. Tweezer freaking top. Okay? Is this not the same freaking thing from today? Large extension from the 5-minute 9 EMA. Big space in between. Tweezer top. You trade the same thing every day, guys. You trade the same thing every week. You just have to keep this kind of mental, textbook of, your own setups, your own trades. I've traded this before. And I will continue to trade it years from now. Let's go to like a chart. Let me just do something like stupid, right? Let me go like 5 minutes. Let's do like a 10-minute. Let's see. How far will this let me go back? All right, we'll go 180 days ago, right? Get out of here. All right, 180 days ago. Well, look at that. Space in between, right? Tweezer top. Space in between the 5-minute 9 EMA. If you take puts here, you're risking the high of the day. This is a year, 6 months ago. All right, let's go to the next day. Look at that. What's this? What's that? Okay, tweezer top. Well, maybe you didn't get bidded in. So you enter here on this next 5-minute candle. Your stop loss, the high or the low of that wick for the calls. It doesn't close below. You don't get wicked out. You make money. All right, let's go to the next day. I mean, it's day in, day out, guys. It's going to be the same thing. Look at that. Tweezer bottom. 5-minute low support. You enter on this candle. You breach up. You peak up here. You can see that this is the supply zone. This is where you scale out. It was a good trade for a scalp. Okay? Look at this. Very far extended from the EMA. Huge surge. This is where selling is going to occur. People are going to lock in gains because they're making a lot of money on this spike. Tweezer top right here. They short it back down to what? The 5-minute 9 EMA. Okay? Same thing. Guys, we've traded these charts before. Why are traders struggling so much when, we're overcomplicating what's going on the intraday? Take your time. Look, go through in the least sense, right? Very simplistic. Go through on your 5-minute chart and just highlight all the tweezer tops and bottoms you've seen. Okay, look at this. If this doesn't tell you something right here, I don't know what's going to. You can see very clearly here, right? Look at how there's all these lower wicks. You can also draw a horizontal line. This lined up, lined up, lined up. No candles closing whatsoever. A buyer has stepped in here and put a huge wall of bids. Right? And what do they rip it? From 313 up to 315. 2-point capture. That's a great trade. Do I put any weight onto which candle has a bigger wick? No, I don't. Not really. Maybe in a later sense I will. Also, looking, remember we mark, here, we can continue marking the tweezer tops, right? Tweezer top right here, right? Tweezer bottom, little scalp up. This one, I guess you could call it a tweezer top. I was talking with the ranking about this. What really matters is that horizontal level over the bodies, right? And you can see down here the same thing. Right, even right here. Look at that. Tweezer bottom, 5-minute candle entry. This is your stop loss right here. Stop loss pushes up. Where do you sell? Into supply. It's clockwork. Right? Also, you also do want the second candle to have the wick, right? Now, I was talking about that. So, like, ranking was looking at this candle here, and he was like, "Would you consider this tweezer bottom?" And I said no, but in hindsight, I guess it technically is not a tweezer bottom because what makes a tweezer top or bottom would be the lower wicks. I'm not huge on the names though, but if you can understand from a price action perspective, right, Zidian, what would you say that is, right? It's the same concept that would constitute a tweezer top or bottom. It's a wall of bids. Yeah, double bottom, right? Which is what? A double bottom. Let me look on like a 15-minute. I bet it's a tweezer on something. Maybe not. Maybe that flat basing bar was too strong. Yeah, it was too strong of a flat basing bar. Still, double bottom, you can see that very clearly. No, these are not Heiken Ashy candles. I do not use Heiken Ashy candles. Okay. Also, I got questions about 3-bar plays. A lot of you guys are asking me about that. You can trade this or look up a video. I think on YouTube, the first one I watched was from like Live Traders, from Jared from Live Traders. He's a fantastic educator. Practically what it is for me, it is I don't like the terms like bear flag or bull flag or anything like that. So I don't look at the 3-bar play as a bullish or a bearish kind of trade, right? I look at it as a neutral setup. Right, and what I mean by that is this. So you can probably see on like a 10-minute here. Yeah, 10-minute. Right, when you get a 3-bar play, okay, you get a rip up. You get a pretty big bar right here, okay? The 3-bar, the 3-bar setup is actually watching the second bar. Okay, this second bar is pretty crucial because what it tells you is going to tell you the long and the short trigger, okay? So what I mean by that, here is the support, here is the resistance. Okay, here's the support, here's the resistance. Now, many times what you should try to do is to get in, bidding in on these upper wicks. If you want to go long, you're going to bid in into the lower wick. If you want to go short, you're going to bid in into this upper wick, right? You do not want an entry in the middle, right? It's called diddling in the middle. Okay, so you have those two levels of these two wicks, right? Remember, long on the downside, short on the upside. Better risk reward on both of those. So it's going to tell you two things, right? It's going to tell you the short trigger and the long trigger, okay? It's going to tell you those two things. Well, what happens? And you have two perspectives. Like I just said, you can either bid in between the wicks, right? Or you take the breakout, right? Meaning, and why is this a long trigger, right? Because the shorts right here are beginning to cover, right? Sellers turning into buyers, adding in to the momentum to the upside. Okay, so this is a 3-bar play. Screenshot this, do whatever you want with it. Okay. The third bar is what is going to trigger it most times. Now you will see like, 4-bar plays or whatever, stuff like that. So it's the same thing, same concept. All right, here's another one. Okay, look at this. You have a large bar here. This pullback bar holds within the 50%, right? Holding half of, into the upper half of the previous bar. If it's a bearish perspective, it could be on the lower portion of the bar, right? So it holds that. We'll draw your call and put your short and long trigger, okay? Right here. Remember, you bid in. I'm a dip buyer, guys. I mean, this is what saves me. Everyone's like, hey, what turned you into a profitable trader? This or that, right? Everything, and this is not me bullshitting, anything like that. I used to be a breakout trader. I used to, love to break out momentum, small caps, everything like that. When I started to understand that when I was breakout buying, that I was being the liquidity for the dip buyers, and the only reason why I couldn't dip buy was because I was being too aggressive or too lazy to take a dip buy, right? And when I transitioned into being a dip buy trader, that excelled my trading tremendously, okay? So you want to get in to this lower wick if you're long. Remember, long on the down ticks, short on the up ticks, right? Why is that? Because if I go long here, let's say, hey, my bid gets filled and the trade actually fails, well, I'm much closer to stopping out. What if you went long here, right? And then the price pushes down here. Look how far that is, right? I mean, right here, 316.50 to the low, 316 or 315.3, right? It's $1.30 or $1.20. From here, 315.7 to 315.3, that's 40 cents. $1.20, $1.30 compared to 40 cents. I'm taking the low risk every single time. Okay, so you have the upper wick and the lower wick, right? If you want to bid in, if you're like, hey, this is going to reverse, you would have got stopped out right there, which is fine, right? Low risk. But if you went long, you made a little bit of profit, but when price pulls back, you're not red. You're sitting there break even, maybe very slightly red, but it maintains, right? And then it breaks through. This is that, study this. 3-bar plays are very common. And you can go through like, what am I on the 5-minute? Let's see. I think I was looking for an example and I couldn't find one. Right here. Perfect. Right? Hey, it's pushing up. 3-bar play. Well, the newer trader's going to be like, hey, I want to be bullish, right? I'm a perma bull. So then they go long here, right? Getting overzealous. And they get stopped out way down here. Well, the 3-bar play, right, gave you two opportunities. You would have gotten filled right into this upper wick if you were bidding, scaled out on the low, right? Now price is where you want it. Price has been pushed down, right? Market makers push price lower to fill orders, right? It hits this pre-market low demand. You get filled. It rips up. You scale out over the pivot high break, the new high a day. You're locking in profit. Okay. Guys, there's it trading get rid of the word, get rid of this out of your vocabulary, right? The word should, right? Guarantee, what will happen, right? All of these words. I used to look for that, and it was a bottomless pit of nothing. You're not going to find anything that guarantees anything, right? We're trading probability, right? It's not gambling, but it is probability, right? I'm going to take a trade, right? These puts that I took at the high of day, we nailed the very top, right? Or if you're trading puts, right, the very bottom of the trade and nailed it for over 100%, right? I could have gotten stopped out, and I talked about it right here. Right here. Where is it? 10:39. About to cut the puts at high day. And I told you what I was risking, right? I almost got stopped out, right? That's the case with everything, with 3-bar plays, tweezer tops and bottoms, supply and demand. There is nothing, absolutely nothing that will work 100% of the time or will guarantee you anything, right? So, did they ever find the Holy Grail? No, but they went out searching for it, and it was, kind of hopeless. So don't look for your trading Holy Grail. Yeah, no problem, bro. And I'm not, I'm telling you guys, right? I may seem a little aggressive, whatever, right? I teach everyone the same way. I'm very to the point, and I'm very dry, right? There's no coddling in this. I was not coddled. I kept myself from a very realistic or realist standpoint in regards to trading. Okay. For tweezer tops, if you enter on the next candle, are you bidding in as the candle develops? If so, then how do you determine the risk? Stop at high or low, or that developing candle hasn't developed yet? Okay, so I totally get your question here. I'm going to mark a tweezer. Right. Which one? I guess we could mark this one. That's fine. On the 1 minute at the high day. Right. So this 5-minute candle hasn't formed, right? Many times you're looking at the risk as close to the major risk. So if you know, right, hey, I didn't get into the bid on the tweezer top, you want to get as close to that as you can. So if the 5-minute candle is going to allow you to do so, then that's fine. Now, buying the dump on the 5-minute candle is a different story. It may work, but look at your risk, right? Your risk is way up there. It's not really something that you want to do. I can also... you can also go on the 3-minute to kind of get an earlier entry. You can see that very early on, you got the 3-minute candle closing there. You do get scared right here, right? It does scare you a bit, but the candle doesn't close, right? And these buyers of the puts or the shorts right here are not stopped out. No, guys, I'll never master trading. Trading is something that you should always look to be a student, right? No one's a master. If they're coming, the thing that gets on my nerves is like seeing other traders. Like I think I was looking like, and all respect to Mark Minervini and everything, but like someone like tweeted at him or something, and they were like, "How do you know that this is gonna happen?" He was like, you know, because of 39 years experience told me, but like you just sound like a jackass at that point. And you may know, right? You may know, but be humble about it. Like the guy, I mean, you can't just say that's your reasoning behind everything. Like, hey, I'm a know-it-all, right? You sound like a dick. So, we really have to look at trading as, from a humble kind of standpoint in terms of, knowledge, right? I know that I can be 10 times better than I am now. Am I good at trading? I'm very good at trading, right? But I'm never going to let that get to my head. The moment I let that get to my head is the moment that I am going to, start failing as a trader, most likely. So, when it is okay to be dick, when old people are bothering you at Disney World. That's okay. So, also, one thing I wanted to show you guys was this, what pattern was given to us very early on in the day. If you're just looking at it from this point, right, really right here, what pattern is that? No, I did not play the QQQ rip up at the end of the day. I was just relaxing. I don't, and guys, that's the thing right here, right? Everyone is like, they get into so much, yeah, head and shoulders, good job. they get into so much like FOMO, anxiety, crying about, they're like, oh my God, I got chopped up all day, and then they just ripped it up at the end of the day, right? And I'm not saying you, Perry, I'm just saying, I'm speaking generally, okay? This happens, right? They're like, oh my God, I missed the rip, I missed on such a big opportunity. They're just crying. I didn't trade any of this. I don't care, right? Because I took my money. We took multiple hundred. I think I had like 4 or 5 100%ers. I had like 6 100 plus 100 dollar per contract plus trades, right? So that means each of my contracts went over $100, which is huge, right? I'm trading like $2 to $3 contracts, right? Those things are going 50, 60% sometimes, giving me $100+ per contract. You buy 20 contracts, right? $100 contract, that's a quick 2 grand. So why wouldn't you do it? So going through here, right? This, you guys know, if you've watched the streams, I'm done trading 12 to 1 o'clock. I come back around 2 o'clock, 3 o'clock sometimes for a bonus trade. Okay, but I know the last hour or so is very volatile. It's really comparative, or yeah, really comparative to, like, I guess, the open, right? Sometimes it's much more clear of a trend. We see much, look at this simplistic trend at the end of the day, simplistic trend at the end of the day, right? Same thing here. Many times you find those, but I don't care to miss these, right? Because all it does is mess with my mind, right? It goes through and like, oh, wow, I did such a good job today, but I missed this big rip. It's only going to take away from your trading. It's only going to take away from your experience. You're going to yearn for trading like this and stick to trading this kind of price action, right? So you're going to be off tempo. You're going to have unrealistic expectations. Let's see. Yeah, no, I didn't trade this at all. I was sitting in the Discord. I was like talking like I think I was answering questions, and like I made like a turkey sandwich or something around this time. Yeah, no, dude. I mean, I don't. This that's the thing, right? Just like you said, like some like fake whatever. They're gonna say they're in everything, right? Oh, you guys didn't hit that rip at the end of the day. You didn't hit the ER trade. You didn't do that, right? No, you're not gonna capture every move of the market, and understanding that from a realistic standpoint, it keeps me at peace. I know that, hey, I'm not gonna capture every move of the market, but when I'm trading, I want to capture what's being presented to me. Okay. Yeah, dude, mayo, Colby Jack, and turkey, and cold, right? I like cold turkey sandwiches. Unless it's like from Firehouse. Firehouse is pretty good. If we look at the pre-market high, this is like, where's 4 a.m.? 4 a.m. hit here, so this technically is the pre-market high at 4 a.m. But you can see this head and shoulders, right? Left shoulder, head, right shoulder. If you zoom in, maybe like on the 10-minute, right? Giving yourself less candles to deal with. You can see the base of this tweezer top, right? This is a wall, so maybe the shorts get stopped out right there, right? Covering. But when it comes back down, some, not all shorts, right? They can hold a lot longer than you think. Retail traders have very minute and very tight stops compared to like larger money, obviously. You can see when it breaks below and comes back in bases, this same tweezer top area is being respected. Always look for your head and shoulders, right? Left shoulder, the head, and the right shoulder. Okay, you can see this many times, inverse and everything, like inverse head and shoulders right here. This was super clean, right? Left shoulder, the head peeks out, the right shoulder, reversal. Okay. Yeah, exactly. Exactly, guys. So, I think we're gonna wrap this session up here. I hope that, and I'm gonna do the giveaway, right? We'll do the giveaway live. Let me go to, what is it? I think it's like Twitter picker. Yeah, here we go. Okay, let me load the tweet in. How do I do this? Okay, here we go. Copy the link. Here we go. Post it or paste it. Load the tweet. Winner count. We'll just do all 5 of them. Must follow. Okay, description, banner. I don't care. Okay, that's good. Okay. Looks good. We got 237 entries, right? Now, before I get through this, right? You guys, we've started the new month in the Discord, right? We have what, 1, 2, 3, 4.5 weeks here left of May. Obviously, we just started. We had a very good first day of the month. Now, typically, we see the first day and the last day of the month as hard days. In my Discord, we typically only have like 1 or 2 red days, very rarely 3 red days for the entire month. We conquered today, which was very good. Nice to see you guys green. Also, congratulations to Queen of Divergence, Ground Level Fab, and Preach 238 on their record days, right? I'll type that out in a moment. But you can see we've been on a nice little green streak. Good work. It's great to see all of the follow-throughs. We also, everything that I'm calling out live, you guys will see me post it in the trading floor. I post the directional analysis and all my kind of commentary throughout the day. When I'm scaling out, when I'm stopping out, all that stuff. And what are you guys saying? Oh, restart the draw? Okay, I'll restart it. Let me see. Yep, thanks for the sub. Shit. Dang, HP. Well, you got me working double time, dude. And remember, you guys have to not be already in the Discord, right? These are for traders who, like, look at this guy here. Can I ban this guy? Dang, I can't. All right, 241. All right, so 4 more people, right? Think, if you win this, right? Think donuts. Normally, he's pretty lousy, so we can begin the draw. Nice. Yeah, this is through Twitch, right? Signed up through Twitch. This was through Twitter, but if you want to get into the Discord, right, you can enter the Discord there, and let's begin it. Right, drawing winner 1. This guy got rejected. Oh, what the hell? Look, this other donuts guy won. Oh, this is accept. Oh, okay. Who won? How do I do this? What is it? Who won this? Oh, Sprinkles. Okay, here we go. Crypto Durant. Now, these guys, you have to not be a member in the Discord already, right? So, I guess I'll tweet this out. I don't know if I want that link on there. Just so I don't forget. And then, I know everyone on Twitch wants to do a Nightbot giveaway. I'll do 2 for everyone who stuck around, right? So here we go. Right here. Fucking Taco Bell ad. Okay, so I'm going to type in a keyword here, and the keyword is going to be FOMC, okay? So there we go. You got to type in FOMC, and you can enter into the giveaway for the House of Stacks. You got to be on Twitch, guys. For those, I mean, well, you have to already not be in the Discord, so I guess if you're not already in the Discord, right? While these entries are loading, thanks for the hype train, guys. Remember, also at 50 subs, I'll give away 1 month of the House of Stacks Discord. Okay, we're gonna just let these load in. Okay, but also, 1 second. Where's it going? Where's it at? Oh, here it is. Sweet. Yeah, no problem, guys. I hope that you guys really benefited from this and that you were really able to learn something that will possibly improve your trading at some point. I don't know like really anyone else who's streaming. We all miss Brady. We all miss RCB, right? So someone's got to do it, right? And I'll be live trading on Twitch. Make sure you guys have your alerts set in the morning. I'll start the pre-market prep at 8:30 in the morning. It's the same kind of schedule that I have in the Discord every single day. Yes, I record all of my streams, right? I go the EDU sessions like we just had. Oh shit. Okay. EDU sessions that we just had, or the EDU session that we just had, all of these were previous EDU sessions that I recorded, right? These are all about an hour long. All right. You can check all of these out. All the strategies, everything I talk about and use every single day, and some old small cap stuff. All right, over 100 videos in that Google Drive. What was the question in here? Oh, Cryptorant. Yeah, I guess, yeah, since you already joined the Discord, right? I have to find someone else. Just because we're trying to I guess get new people in here. Are you going to do Nitro stream for the Discord? Yeah, I'm always going to stream in the Discord. No, I didn't show the link. I didn't. All right. So we're going to pick 2 winners, okay? So let's go. I think we got 100 people in here. And let's roll it. Eco Sim, right? This guy just followed. Oh, last month. Okay. Nice. So Eco Sim. Hold on. I think this other dude. I think I forgot to get this other dude. Oh, Rabbit. Yep. All right, here, Rabbit. I'll get you in here tonight, okay? And then EcoSim, send me a DM on Twitch, okay? And I'll get you in there. And we'll do one more, okay? One more. And we got Pharmacist, right? Pharmacist 99. This dude's young. Probably, I'm young too. I'm like 2 years older, so. But Pharmacist 99 and the other dude, Ecom, I think. Yeah. Yeah, you guys send me a DM on Twitch as well as I guess since that kind of on 1 second. We can do one more because I guess one of the winners was already a member in the Discord. I think 2 of them. Yeah, Juan is also one. I don't think Stock Oboe is. All right. So we'll do 2 more, right? We'll do 2 more because 2 of those giveaway winners were already winners. Are already members, okay? So we'll do 2 more. Miami 8185, right? Surprised it's not 305. Shout out Pitbull. Okay, and then one more. You guys have to DM me on Twitch and I'll get to you. And Presto Changeo, right? Presto Changeo. So there we go. Yeah, man. We're going to be live trading, live streaming all week, EDU sessions. So make sure you guys are following along. Like I said, I really hope that this helped. I am really appreciative of your time this evening. And, come trade live with us tomorrow morning right here on Twitch. I'll start it up 8:30 in the morning, cover pre-market prep. We're going to be charting out tickers. I always chart out QQQ, AMD, NVIDIA, Tesla, and SPY. Sometimes Tesla. And then I'll be live trading, right? Live call-outs, walking through trades, giving you my kind of mindset and commentary throughout the day. So I will see you guys later. Thank you for everything. And have a good night, right? Drink some water, get some rest. And those who won the giveaway, please send me a DM on Twitch. Have a good night, guys.